Hey everyone, welcome back to Corporate Decoder. Today, UFPI just filed their 11K report, and there are some interesting numbers in their employee benefit plan worth a look. Quick note, this is not financial advice, just my take on public filings for educational purposes. We're going to dive into the investments held in their profit sharing and 400 WUNC plan to see how things are looking for the employees. This filing is essentially a yearly checkup on the UFP Industries Employee Retirement Fund. It tells us what kind of investments are in the plan, how much money is in them, and how they performed over the last couple of years. Think of it as a financial report card for the retirement savings of UFP employees. Let's start by looking at the big picture, the net assets available for benefits. This is the total value of everything held within the plan for the employee's retirement. As of the 31st of December 2025, the plan had a total of over $791 million. That is a good chunk of change, and it is up from more than $784 million at the end of 2024. So overall, the plan's value has grown. The largest portion of these assets, as you'd expect, is in investments. In 2025, investments were valued at over $766 million, and in 2024, that number was a little over $761 million. This shows that the investments are the powerhouse of the plan, growing over the year. Now, something that stands out is the notes receivable from participants. This essentially means loans that employees have taken out from their own retirement accounts. In 2025, these loans added up to over $24 million, and in 2024, it was about $22 million. It is not uncommon for 401k plans to allow these loans, but a significant amount here could suggest employees are tapping into their retirement savings. We need to keep an eye on that. Moving on to how the plan's value changed over the years, we look at the statements of changes in net assets available for benefits. This section shows the money coming in and the money going out. In 2025, the plan earned over $11 million in dividends and interest. That is a nice little boost to the fund. In 2024, it was a bit more, over $10 million. More importantly, the net appreciation in fair value of investments shows how much the investments themselves grew in value. In 2025, this was a healthy almost $47.5 million. In 2024, it was even higher, over $48 million. This indicates the investments are performing well, contributing significantly to the plan's growth. Employees themselves contributed over $42 million in 2025 and almost $45 million in 2024. This is the money people are actively putting into their retirement accounts, which is great to see. The company UFP Industries also chipped in with employer contributions. In 2025, they contributed almost $7 million, and in 2024, it was a little over $7.5 million. This is that matching contribution that companies often provide to help boost employee savings. On the other side, we have distributions, which is the money paid out to participants, likely for retirement withdrawals or rollovers. In 2025, over $106 million was distributed, and in 2024, it was almost $69 million. This is a pretty big number, and the jump from 2024 to 2025 is notable. It could be due to more people retiring or making withdrawals. Now, let's dig into the notes to understand some of the details behind these numbers. This section explains what the plan is all about. It is a defined contribution, profit sharing, and 401 plan, which means employees and the company contribute to individual accounts, and the final retirement amount depends on how much is contributed and how the investments perform. It also mentions Roth contributions were added in 2024. Principal Trust Company and Principal Life Insurance Company are handling the administrative side, managing the money, keeping records, and so on. New employees are automatically signed up at a 3% contribution rate if they are 18 or older, have worked 60 days, and are expected to work more than 180 days. Employees can contribute up to 75% of their pay, capped by regulations. The company offers matching contributions, which in 2025 and 2024 were 25% of the employee's contribution up to the first 6% of their pay. Interestingly, additional matching contributions were not provided to hourly employees. The company did not make any discretionary profit-sharing contributions in 2025 or 2024, which is something to note. This is important. It means that if an employee leaves before they've worked a certain number of years, they might not get to keep all of the company's contributions. The schedule shows that after 6 years of service, employees are 100% vested, meaning they get to keep all the employer's money. Employees can choose from different investment options made available by the plan. Their account balance grows based on their contributions, the company's contributions, and the investment gains or losses. When someone leaves the company and is not fully vested in the employer's contributions, that unvested portion becomes a forfeiture. These forfeited amounts are used to help reduce the company's matching contributions or cover administrative costs. In 2025, about $1.6 million in forfeitures were used this way, and in 2024, it was about $1.5 million. We saw that over $24 million in participant loans were outstanding at the end of 2025. These loans can be for up to $50,000 or 50% of the vested account balance, with repayment terms up to 25 years for a home purchase. The interest rates vary, but at the 31st of December 2025, they were between 4.2% and 11.5%. While loans can be helpful, borrowing from your retirement savings should always be a carefully considered decision. A significant portion of the plan's investments is in the company's own stock, UFP Industries, Inc. common stock. At the end of 2025, the value of this holding was over $108 million. In 2024, it was even higher, around $160 million. This concentration is a big deal because it means about 14% of the total investments in the plan are in UFP Industries stock. In 2024, it was about 21%. This is a common feature in employee stock ownership plans, but it also means that the employee's retirement savings are heavily tied to the performance of the company. If the company's stock price drops significantly, it will have a big impact on the retirement accounts of many employees. Let's look at the detailed investment breakdown. This table shows us where the money is actually invested. As we mentioned, the UFP Industries, Inc. common stock held a value of over $108 million by the end of 2025. This is all categorized as level 1 investments, meaning they are valued based on readily available quoted prices in active markets. There is also over $2 million in money market funds, offering stability, and a significant amount, over $209 million, is in various mutual funds. These are categorized by the valuation inputs used. The total investments at fair value for 2025 were over $766 million, as we saw earlier. A large chunk, over $446 million, is in investments measured at net asset value, which are typically collective investment trusts and stable value funds. These are not categorized in the fair value hierarchy, but are considered reliable valuations. This table also breaks down the investments for 2024. Notice how the company's stock was a larger percentage of the total, over $160 million back then. The plan is qualified under Section 401A of the Internal Revenue Code, meaning the trust itself is exempt from taxes. This is good news, as it means earnings grow tax deferred for the participants. This section talks about transactions involving parties that have a relationship with the plan, like the company itself or its service providers. Investing in the company's own stock and participant loans are considered related party transactions, but they are exempt from prohibited transaction rules. Here we get a much more detailed look at the specific holdings. This confirms the company's own stock is a major holding. We see holdings in various collective investment trusts, like the Principal Stable Value Fund, with a value of over $55 million. There are also many T. Rowe Price Retirement Date Trust funds, stretching all the way from 2065 back to 2010. This shows a wide range of target date funds are available to employees. And then there are the various mutual funds, including Fidelity's Mid-Cap Index Fund, Small Cap Index Fund, International Stock Index Fund, and the 500 Index Fund. We also see funds from Dodge & Cox BIM, Neuberger Berman, and American Mutual Fund, indicating a diversified investment lineup provided by the company. And finally, the participant loans are listed here, totaling over $24 million. Now, looking at this from a broader perspective, UFP Industries seems to have a well-established retirement plan for its employees. A significant portion of the plan's assets are invested in the company's own stock. Today, that is over $108 million. While this aligns with the company's profit-sharing heritage and can offer employees significant upside if the company does well, it also concentrates risk. If UFP Industries' stock price were to take a hit, like some headlines suggest might be a concern, it would directly impact employees' retirement savings. We see that distributions to participants jumped significantly in 2025, going from about $69 million to over $106 million. This could signal a good number of retirements or perhaps employees tapping into their savings. Given the recent news about UFP Industries authorizing a large share buyback program of up to $300 million, management is clearly focused on shareholder value. However, for the employees invested in the company's stock within their 401 cake, the performance of that stock is paramount. The trend of increasing participant loans is also something to monitor. While it offers a lifeline for employees facing financial needs, it can detract from long-term retirement goals. The plan offers a good mix of investment options, including a variety of index funds, actively managed funds, and target date retirement funds, which is a positive for participant choice and diversification. The risk I am watching is the heavy concentration in company stock. While it is common and aligns with the plan's history, it exposes employees to a significant amount of company-specific risk. What I am actually looking for is for the company to continue to provide strong performance and for employees to make informed decisions about their investments and loans. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this comprehensive breakdown of UFP Industries' 401k filing was valuable, hitting that like button helps tremendously, and be sure to subscribe for more. Don't miss out on our Discord community, linked in the description.